Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm always here to help you maximize your cash flow. Over the next few weeks, I'm going to start putting out more content where we're answering questions that people had in the comment sections of the videos. So if you have questions, be sure to leave your comments. And I always try to do my best to respond to everything that I can so that you're getting the information that you need in order to make decisions. Now, I realize I've been a little bit neglectful of getting out content for you folks, but I have been busy meeting with you one-on-one, whether you're a client, a potential client, or even another agent who's looking to learn more about these cash value life insurance products or how dynamic banking works or how best to maximize the cash flow for your situation. So I've been spending a lot of time meeting with you one-on-one, and I've been a little bit neglectful on getting more information out there to you guys that everybody could use. Meanwhile, there's a lot of other people producing content out there that may or may not be the type of recommendations that I would make, the types of designs that we might use. Maybe they just don't have the correct information and they don't know about it. So we're going to try to do our best to get the actual truthful information out there based on our knowledge. And, if you follow my channel, I do my best to really understand these products, what's going on underneath them, and how to best optimize these things so that it is best for your cash growth, so that these products can best supplement your overall financial portfolio. Now, that does mean that there could be some varying designs. Different products might work better in different scenarios. And those are the things that we need to be talking about so that you guys can get those answers. Now, I've covered a lot of that stuff in the 600 plus videos that I've put out so far, but most likely you're not going to watch all of those videos in order to try and figure out the answer to the one specific question that you're trying to find. So if you have any questions, there's a couple ways that you can go about it. Leave your questions in the comment section, or you can always schedule a one-on-one meeting with me. Anytime you want to talk specifics, a one-on-one meeting is definitely the best way to go about it, but it doesn't give me the opportunity to create a video like this and answer it for everybody to learn. So let's see if we can get into answering some of these questions that you folks have had. Here's today's comment, which came in many months ago, as you can see, but it was a great comment from James. He is an agent. He says, "Your videos are great. Keep them up for specific scenarios." And he puts out a couple that he'd like to see. Policy design question. When you choose a max funded IUL design for cash value using a blended design, how do you determine the starting point? So quick refresher, a blended design means we have a base face amount that is generally what's going to determine how much commission and how much the underlying expenses are going to be inside of a policy. And then we blend in some supplemental term insurance that's non-commissionable. Doesn't pay anybody a commission, doesn't add to target premium. It's generally the cheapest insurance that we can possibly buy because of those reasons. And it's a very inexpensive way to add mech space or add the ability for you to dump in extra cash. He goes on, he says, is there a better, more predictable way than he does it? Let's address the first part of it. When you choose a max funded IUL design for cash value using a blended design, how do you determine the starting point? That is a great question. When I'm meeting with people, there's usually a couple of approaches that we can take when it comes to the design. First, we always want to try and design and optimize around the actual expected funding level. Your client may or may not know where they want to fund something at when they're first meeting with you. So you might not be able to start there, but if they have an idea, we're going to use that to begin with. So you can either start with a maximum funded amount. What is the most that you want to put into a policy? We know that we want to have mech space to be able to put in that much money. Well, the mech space is determined by the overall death benefit. So if we know how much somebody wants to put in at most in any given year, we can usually design a policy that is optimized for that amount. That amount may not coincide with an optimal blend when it comes to a base amount that we can do and how much can we blend in with that base amount of really, really inexpensive term insurance so that we can get that mech space up. So there could be a circumstance where, let's say, you want to put in 20,000 a year, and the company that it's determined is the best for your situation has a blended design that, let's say, it's a 4-to-1 blend. And at a 4-to-1 blend, we have 100,000 base face amount, and we can blend in 400,000 of supplemental term. That's a total of 500,000. Well, 500,000 in death benefit, let's say in this scenario, gets you a $30,000 mech limit. In order to optimize for putting in 20,000, we're going to reduce some of that term insurance. So let's say you only need a blend of 250,000. So a total of 350,000 in total death benefit to have the mech limit of 20,000. We're going to run an illustration that shows that. And then we're going to say, okay, what happens if we max out that cheap term insurance? What does that give us for potential mech space, and how much does that cost? So then we're going to do a design, and we're going to compare that 100,000 base, but the full 400,000 of supplemental term. Well, that extra 150,000 of supplemental term might only add $50 a year, $100 a year. It's going to be a very low amount. It'll give you the ability to potentially add an additional 10,000 a year if the ability comes up. If you have the cash available and the desire to add it to your 20,000 a year that you were anticipating doing. Whether the client wants to go with the 30,000 amount is probably going to depend on what's the likelihood that they expect to put in more than 20,000. If there's a good likelihood, then maybe you build in that extra space and you pay just a little bit extra for that. If there's a low likelihood, then maybe you don't. Maybe you just keep it at the 20,000. So if you have an idea of the maximum amount that a client wants to pay going into it, we can start there. On the flip side, that same policy design is going to have a minimum amount that they're going to have to put in. And it doesn't matter if this is whole life or IUL. On the low end, if somebody says, I can definitely do $100 a month, well, it's $1,200 a year. Okay. So if they can do $1,200, then you say, okay, for a design that allows you to put in $1,200 at a minimum, we can set that maximum to be 12,000 or so. So if that person has a desire to put in up to 12,000, that could be a good design. But they might say, well, at a minimum, I could do 100, and at a maximum, I probably will never do more than, say, 6,000 a year. Okay, that's fine. We're going to look at, first of all, we're going to look at the budget and see what is their extra cash flow. Because oftentimes I'll get people that say, I've got an extra $100 a month in cash flow. So I want to put $100 a month in at a minimum, and I might have more going on. Okay, well, I'm not going to design that policy to be $100 a month minimum because that's all of their extra cash flow. What happens if something pops up and they have some extra expenses that much and they can't meet that minimum? Oftentimes, we want to have some more flexibility to that downside. So maybe we set it up to where $50 a month might be the minimum, but the planned premium is going to be $100 a month, and they still have the ability to dump in extra above and beyond that. And that can work really good in this situation where they don't necessarily want to go up to 12,000 for the year, but they only want to at most do 6,000. So there's all kinds of ways that we can start out with these designs, and where we end up, ultimately, we want to have some flexibility on the downside on what they expect to be putting in, and some potentially flexibility on the upside for the maximum amount that they can put in. So hopefully that does a good job of answering that particular question. Let's move on to the next part. So the next part says, is there a better, more predictable way than this agent does it? This is his current practice. Number 1, client discussion to determine goals, insurance needs, and funding available. That seems like a great place to start. Number 2, plug in numbers on a company illustration software to determine approximate mech limits to qualify for insurance. Starting point for insurance need. That sounds like a pretty good way too. If you take what we just talked about and you apply that into number 2, it'll give you a good starting place. Number 3, iterate through multiple designs, changing funding duration, loans, as well as changing the annual renewable term amount and duration. That sounds good. And then he says the iterative process of number 3 feels like it should be better suited for software. And he's thinking maybe InsureMark could do this. So it's possible that there could be some software out there that might be able to do this for you. In general, I like how that gets laid out. That's essentially the steps that I would go through. Now, because I know these products intimately and I know how to design them, and we can kind of identify which products will work better for particular situations, when we go through number one in this scenario, that's going to narrow down the products. That we're going to use number one to help decide whether we're looking at whole life or IUL, or even if insurance is the proper answer for what the client's trying to do, right? And then we're going to go to company illustration. Now, usually we have multiple carriers that we work with, but a particular product will stand out to meet a particular need. There's not very many scenarios where when we determine what the client is looking for, we're going to say you could go with this product, or this product, and they're all equally good. I'm going to have a recommendation that's going to lean more towards one than the others. So I don't necessarily need to do illustrations or even multiple illustrations across multiple products, which is where the suggested software might come in handy to be able to do something like that. Now, software is going to be tough to be able to do something like that anyways, because insurance companies don't disclose how they're going to do all of their calculations and how they determine all of the costs inside their policies, especially in the whole life. So it might be a challenge to do that with software. I think it's better for an agent to learn the products, play around with the software enough and the illustrations enough so that you can identify very quickly which products might work best for your client situation, and then be able to just plug in numbers. And what I like to do when I'm meeting with client is I share my screen. We do the design together. I can show them how, when we make a change, how it affects the numbers. And so we come out of that meeting, the client comes out of that meeting with a really good understanding of how these products work and how the different funding might affect it, or the different levers that we can pull that will adjust the MEC limits. And so ultimately, it's a collaborative process between me and my client about how ultimately we're going to design it for the proper blend to match their need. Now, at the bottom line, when we start to plug in numbers, we're going to start from a point that minimizes the expenses and optimizes for funding, whatever that is. When I can show my client that that's where we're starting from, and I usually will show them the opposite too, like this is what a lot of agents will design it as, and this is a very high expense one. We talk about the expenses, and then they can see me reduce the expense in real time by just tweaking a few levers. So they're going to understand how that works. And ultimately, I think that it helps both of us come to a good place in this process to be able to make an informed decision on how much death benefit they're going to need, what product they're going to want to go with, and that they feel comfortable that we're choosing the right product to meet their particular need. So hopefully that answers your question really well. He also notes he primarily uses Securion's IUL accumulator. Good product. When it comes to the IUL space, currently there's 3 that I mainly use. That can't say some of them. One of the carriers doesn't like their name mentioned, otherwise they have to do some disclosures, have to put disclosures up all over the video. So anyway, there's top 3. That one is in the top 3. The Securion IUL has a good product that ends up being in the top 3. It's not necessarily the top product, and for the most part, among those 3, it's going to depend on the scenario which one ends up being the recommendation. So if you found this helpful, if you have any specific questions or you want to see some designs, schedule a Zoom meeting with me. The link is in the description of the video. You go to my Calendly. I work with people across the country. I'm licensed in 42 plus states, I think, at this point. So when you schedule a meeting there, you actually do get to meet with me. And I find that it's extremely helpful. So, or I should say, the people that meet with me tend to find that it is extremely helpful to go through the process that we go through. I have free meeting options. I have some paid options. If you're an agent out there and you just want some advice, I meet with a lot of agents, and my calendar is open to everybody. So if you need some help, schedule a meeting with me to get some specific answers. And if you're not ready to schedule a meeting, put a comment in the comment section and we will get to it. We will get to it eventually. So appreciate you joining me for this. stay tuned for the next one where we're going to go over a different question.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.